She is with us, ABC News correspondent and Wall Street expert. Good morning, Daria Albinger.
Well, let's not go so far as to call me an expert.
I'll be the judge of that. I'll be the judge of that.
I am as confounded as so many people are as to why this is all happening when everything else shows us that the economy is really doing well.
How much of this is reaction or proaction?
You know, a lot of it is reaction to the uncertainty about inflation and about interest rate hikes, and some of it is proaction because, you know, there are some investors, some traders that say, you know what, these stocks are overpriced and we're going to wait till they come down to a more reasonable rate. So it's a little bit of both. It's
also, it seems like, and you follow the money better than I do, they're just taking the money out and just keeping it on the sidelines because the 10-year bill notes are going up too.
Right. I mean, and that again is a worry about inflation. It's a worry about how rising interest rates are going to affect all kinds of investments. So we're really in a wait-and-see frame of mind right now on Wall Street.
Is this a correction or is it a downturn?
This is a correction. A correction is technically when the market is down more than 10%, and it certainly is right now. Now, when it officially becomes a downturn or a bear market, that's, you know, the word that seems to scare everybody, is when we see the markets go down 20%. Especially watch the S&P. The S&P, now this is something that I learned recently because we all seem to focus on the Dow all the time, but experts say the S&P is really more of an indication of the health of the markets on the whole. When we see the S&P, or if, let's not say when, let's think positive, if we see the S&P go down 20%, we are officially in a bear market.
In a bear market. Again, I asked you this question. How much of this is human trading and how much of this is computer trading? And going forward, are we going to be...
A lot of it is computer trading because many of the big trading firms now rely on that algorithmic trading.
Yeah.
That's what does the bulk of the trading. And you know, I heard somebody say once that, you know, these are numbers. Granted, they're numbers, but they're numbers with a very emotional context because if you're, you know, the passive investor like most of us are who have, you know, have our money invested in a 401k plan that's partially invested in stocks, we're watching our retirement. So there's an emotional component to those numbers. When we see them rise, we're happy. We're going to go open the vineyard.
Right.
When it's, you know, when they go down, we're like, okay, are we going to be on the soup lines? If they go down. But, you know, the thing to remember is that when a computer is trading, when an algorithmic trading formula is in place, all it knows is you keep going up, and when you get to a certain point, you stop.
Yeah.
And you pull the plug. So that's what we're seeing right now.
What do the futures look like today with the market open in an hour?
You know, the futures have been bouncing around. I've been watching them since a little bit before 6 o'clock. And when I first looked at them, 6 o'clock my time, 5 o'clock your time, when I looked at them initially, they were up 200. The last I checked, and I mean, I'm going to check them again right now for you because literally they've been bouncing around in a fairly narrow range. Right now, down 34. They literally, so they're it doesn't look like it's going to be, you know, too bad at least for the open. I mean, some analysts are saying right now that we're probably going to see a jump up at the beginning of the market. Let's just hope that sustains for the rest of the day.
Daria Albinger, I'll call you an expert. She's also ABC News correspondent.
You're too kind.
Thanks, Daria. Have a good day.
Bye-bye.